We've got a fantastic show for you guys today as the Financial Committee of the House of Representatives grills Facebook today. Maxine Waters opening up with a salvo. So the U.S. government's, from what I can ascertain, firm stance on Libra is a firm no, and they're pretty much going to do anything in their power to bypass any established laws or pass new laws to make sure that they do not have a direct competition to the United States dollar, as we predicted. Meanwhile, Bitcoin's putting in a little bit of a dead cat bounce. Let's get to the charts and analyze this in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you guys, July 17th, 2019, on a Wednesday, foul year of our Lord. Thank you guys so much for supporting the stream and showing up. And I hope you're doing absolutely fantastic, whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku at the Investor News channel. If you guys want to support the show, make sure to like, follow, share, subscribe, and engage in the live chat. And of course, today's episode is brought to you by, Guys, I'm a little off today. It's going to be a good day. It's going to be one of those shows, right? The market's looking good. Everything's looking good. I've got a brand new desk to set up here pretty soon. But today's episode is, as always, brought to you by the Kraken Cryptocurrency Premium Trading Group. If you guys would like to boost your skills to the next level, you can head over to premium.krakencryptocurrency.com and check out all that we have to offer. Our education focuses on technical strategy, statistical analysis, risk management, capital preservation and growth, automation, and lifestyle coaching. That's premium.krakencryptocurrency.com to get signed up today. Again, fantastic show for you guys today, and we're going to get right into it. We're going to start off today's show, as we always do, by giving away some crypto. So let's head over to the live scene, give away some crypto, and break down the markets. All right, here we are. So yesterday's video was Libra stands its ground as Bitcoin dumps as predicted. Government showdown inevitable. And I had some questions, obviously, because we try to stay, again, as a human being, I always try to stay extremely humble on this channel. It's very important throughout life, and especially in trading, to retain your humility, to never feel like you have everything figured out, to constantly be willing to learn, to grow, to seek out individuals who know more about a topic than you do, for example. A good example of this is a response to my segment on why quantum computing is not a threat to Bitcoin. A critique was leveled at me. I read it, and instead of immediately firing off and responding, I went and asked other individuals who are more intelligent than me or more knowledgeable about me in this particular space of blockchain development. I gave, as always on this show, I am technical when it comes to trading. I am very disciplined and methodical when it comes to the mathematics of statistics, when it comes to the probability of trade strategies working out. That is my edge, is developing strategies, maintaining discipline and sticking to those strategies, and thinking over the long-term course of a trading strategy. All that's very, very important to have a profitable strategy. So that is my edge in the market. I'm also a long-term thinker when it comes to investing, and I have a good notion of value investing as well, to pick up things that other individuals may not think are valuable. Now, again, you have to understand the job of a speculator is to be a time traveler. So a speculator takes something that is not considered valuable now, and he takes it and transports that asset into the future and then sells it when it is considered more valuable. It is the natural role of any speculator in the market. And this is why I talk to other cryptocurrency maximalists as well. And obviously you guys know my firm stance on this show. It is for this very reason why financial speculation is not a bad thing. Financial speculation gets a really bad name because of government misconduct and because of centralized control of the monetary system. So there are all kinds of evil that stem from that. But in any free society, speculation is a natural, healthy component of the market. We need speculators in the market to be able to see value in something that is undervalued. And whether they are right or wrong is their God-given right. So, YouTube comment picker. We're going to pick a random winner for yesterday. And as always, as we do on this channel, we're going to tip some crypto. So, ding, ding, ding. Cracking Crypto, congratulations. You are the random comment winner. Let me randomly pick another winner. It's never done that before. Crypto Red Eye. I think again, it's absolutely fine. His comment is digital fiat is going to take over Tether and ZERP will be the bridge between countries. Fiat, the proof is in the partnerships. I think the proof is in the pudding, but the proof is probably in the price. Anyways, thank you guys so much, or excuse me, thank you, Crypto Red Eye, for your support. I might disagree with your assessment of ZERP, but again, as I just said, if you want to be a speculator on the future value of a digital asset such as Ripple, that is your God-given right, regardless of whether you believe in God, because I'm kind of ambivalent upon that subject. But moving right on into the future, all best wishes to you, man. I hope that plays off well. As always, when you are investing and when you are speculating, trade and invest wisely. Thank you guys so much. If you get a hold of me, Crypto Red Eye, in the Discord at JustinWise5696, I will tip you some crypto. If you guys would like to participate and receive some crypto, all you have to do is leave a comment at the end of today's YouTube video. We do it every single day. And without further ado, let's get over into the live scene. And while we're doing that, let me go ahead and pull open the chat, because I did not have the chat open. And okay, there's that, and the Twitch activity feed. Okay, so I think it's a good opportunity to thank Kentar, Hyperdimensional 01, Marty Mations, and Manjunath. Thank you guys so much for following the channel over there on YouTube, for joining the community, and over on Twitch, Lunatic Fringe 56, thank you so much for the follow, and Chilled on TB, thank you so much for subscribing with Prime, my good friend. Welcome to the community. Okay, very diplomatic. I try very well, man. You know it's a strange day when ZERP BTC hits take profit 1. Yes, Midwest Attempts. It is a day. All right, so let's scroll up here. Hopefully you guys are doing good. I see It's Hard, Angry Guy, Elijah Finch, shout out to you, my good friend Ferguson, Bitcoin Millionaire, Priz Ventures, yo, Ron Legato, what's going on, my good man? Ron, I reviewed your Pine script. It is quite tidy. I fixed an error in there and sent it back to you. Hopefully that looks good. I quite like it. Ricky Thompson, Tom Hardy, Kyle Mitchell, Greg Seguin, Alpine Whip, and Midwest Attempts, Crypto Boy 123, and B-Flow. What's going on, my good man? Would I consider this a rejection off of the 55, or do you have to wait until the close of the daily candle? So when you're if you're intraday trading, right? So when we're looking at what a PTP setup is, of course, we're going to be looking for any indicator-based trade is going to rely on the close of the candle. But if you are not, we have to understand, when we're taking a reversal-based trade, that's not technically a PTP trade. PTP allows for that type of analysis, but when we're looking for a reversal bounce trade off something like the baseline or the secondary baseline or the tertiary baseline, and I did not pause my phone. Yes, I know that Cracking Crypto is live with Breaking Bitcoin Show on YouTube and Twitch. DIY guy, what's going on, man? So we have to understand that when we're taking a trade like that, we are going to be comporting to the concepts of support and resistance trading. B-Flow, if you want to go check out I'm sure you've watched it, but there's a premium webinar that I have on the concept of horizontal support and resistance. I also touch on other concepts of support and resistance in there as well, but they're speculative trades. They're speculative trades. And if that is within your strategy, trading PTP does not mean you have to take a reversal bounce trade. They're just setups and things that we have logically known that we can backtest. For example, if price comes up to the 55 and bounces off of it, we could take the rejection. So if you're waiting for the candle close, then likely that area can work quite well. But in my experience, how often does something come up to your level of support and resistance, close there, and then reject? It often happens intraday, right? It often happens intraday. So generally, we would just be targeting that level as a support and resistance level, looking to place a limit order at that level, setting our stop loss, whether we're using ATR or whether we're using something else for our stop system, and then setting our targets where we naturally think they would be. So like, for example, right now, I do not think a move down to 94.95 would be unreasonable. That is going to be a secondary baseline reversal trade. Anybody who placed their trades or their limit orders to sell in the vicinity of the secondary baseline is already doing well, but time will tell if that position ends up being profitable or if we end up breaking more to the upside. So let's go to the daily chart here and just do our analysis. And as I posted this morning, kind of my morning update is, this is bearish, guys. This is not bearish. Now, again, I stress on this so much, and I don't like to be a broken record, but it's just, I feel it's prudent upon me to state my trading thesis almost at the beginning of every episode, so that people understand very clearly where I'm coming from. We often get new people to the channel in here every single day. So I do not buy the dip. Okay, that's not what I do. When it comes to trading, that is not, in my opinion and in my experience, a profitable way to trade Bitcoin or any cryptocurrency. Because when you when you try to trade a raw reversal like that, your failure rate is extremely high because there are larger traders than you, whales. Again, everybody knows the kind of dynamic between crypto whales and crypto guppies. There are whales that have far more of the coin than you and will push the market wherever they feel is necessary. Generally, and this is the experience that I'm sure all of you have seen, whatever you think is going to be a support and resistance line, sometimes it works, but more often than not, you find out that support and resistance line was fabricated, price is pushed down, triggers your stop, and then price moves right back up. Now, this isn't a danger. This isn't really something that happens to us too much when we trade PTP, when we trade our rules-based if this, then that strategy that the guys in the group are learning to walk through. A lot of you guys have already come up with some fantastic systems. I've been reviewing them. It's taken a lot of time. That's why we've kind of stalled out. But we've been doing a lot of stuff recently. So yesterday, I published a huge update. Actually, it was the night before. I ended up making a huge update to one of our main indicators, which is Quadriga average true range, which we all use on a daily basis as our stop and target system. I just published a last minute fix to it right before the show. Somebody brought to my attention that in my refactoring of the code, I had just accidentally misplaced the take profit 1. So take profit 1 was being displayed as take profit 3 and take profit 2 and so on. So that was an easy fix. I fixed that. It's all up to date. I published the new fix, and that's good for you guys to go. I also published a new indicator for the members of the group, the cracking cryptocurrency version of the Fisher transform. It's been a highly requested indicator, and I went ahead and wrote that up this morning with the features that I have wanted to introduce to it. So it is a modern twist on a classic indicator. Again, John Ehlers is a genius. If you guys are not familiar with John Ehlers indicators, I highly recommend you go check them out. They're some of the best indicators. Most of them are on TradingView. Again, Lazy Bear has quite a few great interpretations of them. And he's doing real yeoman's work over there with what he's been doing with John Ehlers indicators. There are other developers as well who are creating Ehlers indicators. I am one of them. But so this is my version of the Fisher transform. I completely rewrote the function script. I rewrote the trigger. I added stuff in there that I don't think are very common to see. So for example, we'll do a demonstration of that here in a little bit. So remind me of that to show the Fisher transform. And I have to flip over here to another screen. But anyways, so reversal trading, high probability of failure. Trend following trading is the more profitable setup. And there comes with that an extreme advantage, and that is one of psychology. So when you know that you are trading the direction of the dominant trend, a great level of your anxiety as a trader, because as a trader, there's always a base level of anxiety. You know, am I going to be right or am I going to be wrong? Until you become a consistently profitable trader and have the confidence that you are a consistently profitable trader and know that when you hit the button, good things happen. And that confidence only comes with having a strategy and following it, backtesting your strategy, trading your strategy in real time with real money and knowing that it works, seeing the results for yourself live and learning from your mistakes. And then it just comes after you have that, it just comes with time in the market. So about a year in, you really just start to disassociate yourself from anxiety and you really, really feel comfortable about trading. It takes a while. It does take some time. That is heightened though, again, if you are testing a strategy or if you are utilizing a strategy that you have thoroughly backtested, So that helps. And that is exactly how we teach people to trade. And that is exactly how I trade. So let's move on. Sorry, let me just check something up here. Okay, looking good. You are welcome, Ferguson, man. What indicator is the RVGI on TradingView? It is called the RVGI, the Relative Vigor Index. So on the daily, where are we pointing? We're pointing down. All right, we are still riding our confirmed short signal from Minx, Wadatar confirming, CCI confirming as well, everything confirming quite nicely. And again, price violating on that exact same candle, the primary baseline. We broke through the secondary baseline on the very next day. So we can see, again, just following the system gives us a very nice entry. We have not gotten any reason to be exiting out of that position. So I've been on crypto Twitter this morning. I've seen what other people, I've received the DMs from, other traders, screenshots and all that stuff. This is not a buying opportunity in my opinion. Now, we have to remember, trading and investing are two different things. If you are a long-term investor in Bitcoin and you want to average into a position, which is a tried and true investment method, one that I practice myself, then yes, does this represent a more attractive price than it did a week ago? Yes, absolutely. You are getting a significant discount on Bitcoin's price for your average entry for a long-term hold if you view it that way. However, if you are looking for a trading setup where you think that you're going to buy at this price is going to go up, you are going to sell at a profit, this is not a high probability setup. At the very least, I would like to see price close above our secondary baseline. And even then, we would still not be getting a good daily signal. We would still be trading against the dominant trend. The dominant trend is not determined by the secondary baseline. The dominant trend is being determined by the primary baseline. And anything under the primary baseline, movements to the upside, that is, represent corrections very similar to when price is above the daily baseline. Movements back to the baseline represent pullbacks, okay? Could I explain the significance of USDT Tron, and will the Omni later USDT still be ongoing, and isn't there another form of USDT? To be quite honest with you, I don't actually know. That's not something that I really know too much about. It's something that I could look into, and maybe we can take a look today together. Try to figure it out. Reddit, Google, and Twitter are great resources, I find, for researching quickly anything that I really do not know. All right, so we have a reversal trade potentially here on the daily time frame or on the lower time frames, referencing the secondary baseline, taking that entry around the secondary baseline around that 9,800 level and looking for that pullback or correction down to 95, 94, maybe 96 at the highest. That's where my mind would be at this point in time. Longs are still quite high. Bitcoin dominance is dropping, which does represent a movement and a breather up for the altcoins. So let's start breaking this down. Rich M, thanks for the sub, man. Welcome to the community. So on the daily time frame, there's not a strong setup. We still have a rising explosion level and bearish momentum from Wadatar explosion. We have not gotten a primary exit signal from the relative vigor index. We are trading below all of our major baselines, and Minx is still quite short. Now we are below the oversold level, so price crossing back above the oversold level would represent a take profit signal on our short, or Minx crossing above the noise line into the level of static. So hasn't happened yet. I don't see any opportunities. Now, of course, anybody who took the reversal trade is in profit, and this is an area where I would recommend taking profit on your position, because again, you have to ask yourself, for a reversal trader, reversal traders, you must remember, are not looking to ride a dominant trend. Most people who try their hand at reversal trading, who are retail traders, think that that is the mindset of a reversal trader. Reversal traders are often very short time frame traders. Okay, they're looking for 15, 30 minute, maybe 1 hour plays. They're looking for bounce plays. They are looking for scalps, as we would consider them, as I would consider them, trading on a lower time frame like that. They are not swing traders. They are not positional traders. And it is very different from the investment mindset, as I went over earlier, of buying an attractive price in Bitcoin relative to its previous high. So you have to ask yourself, and this is something that I commonly challenge my students with, is, okay, so you are thinking of buying here. This is where you're thinking of. Why? Because you see a green candle. That's why you want to buy. That's why you want to buy, most likely, because you see a green candle, and psychologically you think that, okay, price will likely move more up from here. And then again, you've got an extreme bull fervor in Bitcoin right now on the online community. Everybody you talk to who is involved in cryptocurrency, it seems like almost everybody, all anybody can say, and I say this with the utmost respect because I've been there myself. It seems like the most anybody can say when it comes to Bitcoin is buy the dip or sell the top. It just seems like that's all anybody talks about. That's all you hear. Not strategy, not statistics, not verifiability, not back testing, not trends, not confirmation. All of the stuff that any professional trader trading any asset class wants to look at, because we want verification. We want to have confidence when we take a position. We don't want to sit there in anxiety. And this is why I think that many cryptocurrency traders I think this is a big contribution to why trading crypto is often seen as highly stressful. It's not because it's a highly volatile asset class. It's because you have and it's not really because we have uneducated investors or uneducated traders, because you're going to get that in every single space. In fact, even though a large proportion of cryptocurrency traders are what I would consider uneducated traders because they have little experience in trading and trading for less than 2 years, that doesn't the proportions are completely different. Because if you go over to stocks, you've got thousands of new people trying to day trade the stock market every single day. You go over to Forex, you have the exact same thing. I mean, the scale is far smaller in cryptocurrency, but the issue is still very similar. Let's go over to this. Okay. The issue is still very similar. So anyways, let's go down to the 12-hour time frame. Again, no strong signal on the 12-hour. We actually have a confirmed moving average cross under. As I've talked about many times, these these baseline cross unders and crossovers are indicative to me of long-term trend shifts. So this would indicate that on the 12-hour time frame, which is half of the daily time frame, we have entered into a dominant bearish trend. All right. Now, often what we will see is when we see these initial cross unders, we see a long period of consolidation before we break and enter into an extended trend to the downside, because generally trends tend to last for quite a long time. However, we can have meso trends, we can have macro trends, we can have micro trends, right? There are trends within trends, trend inception, if you would. So identify what time frame you want to trade, what your time horizon is, and then take trades based upon that. So on the 12-hour time frame, we also have a bounce trade. If you're looking for a reversal trade, we have our primary baseline coming in around 10.487. That congrues fairly well if we go over to the daily and look at where our baselines are coming in at. We've got our primary baseline coming in at 10.829. So a little bit of a divergence gets you in about halfway there, and also sets up a good risk level for you as well, should you not be using ATR, which I recommend that you just use ATR. It's going to be simpler. And again, you have a very clear, this is a very safe trade to me, because this is a clear delineation of risk, because you have your primary baseline here, you have your tertiary and your secondary right above, so you have a very good level for a soft stop loss should price close above those levels on good volume. Now, before we get to that, man, Ron Santoro, thank you so much for joining the community. Before we get to that level, it's very important to talk about the 4-hour, which I think has been really, really good. Now, a couple things that I want to point out in the 4-hour time frame. We are still below the primary baseline on the 4-hour time frame. So, it's not even really valid to go look at the 13.01205. Thank you so much for joining the community over there on Twitch, my good friend. So I think it's very, very important for us to keep in mind that, the 4-hour hasn't even crossed the primary baseline. The 4-hour is still bearish, for the love of God. Now, Wadatar is flipping to the upside, and we do have our... All right, keep it rolling, guys. Pump up the jam. Brad Pitt Lord 24, man. Thank you so much for joining over there on YouTube, my good friend, or Twitch, my good friend. So one thing that is important to notice, that on the 4-hour time frame, we do have a take profit on our short signal, an early exit signal from MIX. Okay. Now, what this means is that if you are in a full risk position on top of your head short, if you took on a position on the 4-hour time frame, for example, so say you went short on this candle right here where you had confirmation, then you want to be taking profit on your short. Or if you entered here when you actually got the signal, you want to be taking profit on your short. You just want to be exiting if you had entered on the 4-hour anywhere, because again, these tend to be far more indicative of truth than they are indicative of falsehood, and they tend to be very reliable. Does that mean we are now in a trade to the upside? No, it just means that we are in a good area where we're likely to see ranging, where we're likely to see consolidation, and holding your full risk position when you are in profit is not a good idea, because price has a higher probability of moving against you at this point in time. And Chad B, thank you so much for joining over there on YouTube, my good friend. So in a situation like this, as I recommended this morning, keep your hedge open, make sure you're flat in the market. If you want to take on some speculative long positions, that's fine, but just understand I don't see any confirmation for them on any time frames that have legs, okay? Any time frame under a 4-hour really does not have significant legs, okay? Now, of course, there's going to be all strategies, and all strategies come in shapes and sizes. And again, I want you guys to be defining and developing a strategy that works for you. Test, test, test. That's the only way. Don't just listen. Don't take my word for it. Get out there, get in the trenches, and test your indicators, test your trading systems. You have years and years and years of market data to go test these indicators out, and you can define for yourself and decide for yourself whether they work or they don't. And if they don't, you just pick it out. You just start. You start from a good baseline, find a good indicator that gives you good signals, and then filter out the bad signals. And we walk you through that step by step, how to do that verifiably and statistically in the group. So I feel like I need to put some eye drops in here in a little bit. So here in about 5 minutes, I might take a 30-second break and just go put some contacts in, or some eye drops in my contacts. Eyes are getting a little dry, still getting used to the contacts, but at least now you guys don't have to deal with the bright shining glare coming off the lights in the studio here. And actually, you know, I'm pretty excited. So one of the desks that I ordered came today. So I'm going to be expanding my studio out spaciously wise. And once I'm waiting on a second desk. When that comes, I'm going to completely redo my studio. We're going to have a completely different layout for where the camera is. It's just going to look much better, and I'm looking to expand. And that's also kind of comes in mind, as I guys told you, I had some maintenance guys here the last few days kind of fixing up the studio here and working on the house as well. And so just looking to expand, and everything's kind of set up now where all the maintenance has been done and everything is expanded, and we can now get the furniture in here to set up the studio in a much better way, a much cleaner way to be able to do a lot more. Let's see here. Smoke them if you got them, blazing the 7K. So, I mean, this is the area to be looking for that reentry, right? You're coming back up on the 4 hour. You're coming back up on the 4 hour. You're coming back up to the primary baseline. You've got the tertiary above you, and you've got a good, well-delineated level of risk up there in the form of the secondary baseline. ATR would be putting you with a value of around 400, right around the middle of that. So right around 10.4, 10.6, depending on what your average entry is, man. Now, I want to point out something that in this dominant trend that we often see where these baselines act as levels of resistance. So look what happened on the 4 hour the last two times we were going to pump, right? And I remember seeing it on crypto Twitter. Literally every small bottom we came up to, and every time we came up and tested resistance, people were like, man, we're breaking through, dude. We're going right back to 13K. This was a fabricated shakeout by the whales. Go long. Bam. Go long. Bam. Right? Wrong. So we come back up to the tertiary baseline, right in there in the pocket of the primary and the tertiary baseline. We even fabricate a long signal on this trade right here. And then price dumps, very similar over here. We come back right up into that pocket between the primary and the tertiary baseline and back down. So I wouldn't be surprised. Again, you know, logic would dictate that you'd be looking for the exact same setup right here, right? In that pocket between 9.4 and 10.2. Okay, that is going to be your optimum re-entry zone. And again, I think you have a well-delineated level right there above 10.8. Again, ATR would have you getting in around 10.6, 10.4 would be your stop on that trade. But again, measure your own risk as necessary. It doesn't matter if your stop loss is 10.6. It doesn't matter. Also doesn't matter if your stop loss is 13,000. All you have to do is reduce your position size. Lucky penny. Chad B took profit on a long from 94.50 to 9,700, then decided to short it. Not a bad trade, man. Not a bad trade. Not a bad trade. Okay, so let's get over into Ethereum. And Ethereum looking a little bit more bullish for the reversal traders. I'm not going to lie, but still from a PTP methodology, there's nothing doing here. The only thing that makes sense to me is the distance of which Ethereum is away from the baseline. Again, there's a couple factors here. So the distance that price is away from the baseline, i.e. reversion to the mean style trade. Second, we do have that moving average cross under, and often, or that baseline cross under, and often when that happens, we do get a retreat back to retest that level of previous support. As you can see, this exact level of the crossover represented previous support, right? Where we broke resistance right here. Price pulled back down to support right in this range right here. And then we came down right into that cradle between the secondary and the primary baseline and broke down, just as we saw with Litecoin USDT, just as we saw with all the major alt to USD and USDT pairs, where they were consolidating after their last bullish rise, after their push up on the break from resistance, consolidated pullback between that pocket of the secondary and the primary baseline, and then broke bear, dramatically so on high volatility. So Again, it is not completely out of the question that price does come back up to that zone, which would be coming in right around 255, 265 to retest that level of resistance before commencing a more pronounced and serious bearish trend. Because that is often what happens when we see these moving average or these baseline cross unders, these moving average cross unders and crossovers, because they are indicative and reflective of long-term trends. So in layman's terms, in very simple terms, what we are witnessing here is a line that indicates the short-term trend and a line that indicates the long-term trend. And we have the short-term trend, which is bearish, crossing under the line that is long-term trend, indicating that the trend is now bearish. That's about as simple as I can put it. Let's see here. Empty Coiner, what's going on, my good man? So descending through the LTFs here, again, I think that the trade that one would have put on from right here, I think this is the time to take profit on any reversal trade that one would have put on and wait. I think that a dip lower is going to be a necessity, or not a necessity. Anything can happen. Every moment in the market is unique, but is likely. And then if you're looking for an entry to take that reversal to the mean trade, that's on the table if you want to trade that way. I wouldn't be surprised to see even stops get taken out before a more dramatic move, especially after a movement like that. But again, a good buyback on Ethereum. I think a better buyback, more impressive than Bitcoin. $130.1205. I would recommend you a Herman Miller Aeron instead of the gamer chair. You know, I'm not going to lie. I don't really like this chair. You know, it looks nice on the stream, and it's not too uncomfortable, especially when I'm relaxing and doing research. But I really don't like it, you know, and I've spent extra money on it as well. For example, the arm pads came upholstered, so I had to pay an upholsterer to upholster the arms. So, you know, it's a good gaming chair. It was a more expensive gaming chair, but I don't really honestly like it. In fact, I much preferred my old ratty trading chair that had been with me for like 4 years because I'm frugal. All right. I like to invest, and I like to invest the money that I make. You know, I cover the cost of living. You know, but there's a lot of my life is cutting needs, is cutting wants and living frugally and thinking and planning for the long term. User GT3540R, he said, I entered into an EOS short at a horrible entry of 362. I am underwater right now. Should I take the loss, or is it crazy to wait for another dip to at least break even? I'm going to give you the correct answer to your question without looking at the chart, because the chart doesn't matter. You should probably take the L. You should take the L because when you're asking that question, it means that you are already out of your box, okay? So if you are concerned about any one trade, then risk management is an issue. We need to look at how your position sizing, you're taking on too much risk. You know, being successful at trading is a game of statistics and winning slowly over the long term. The tortoise wins the race all the time. The hare always gets liquidated. So a lower position size is going to reduce your anxiety about the trade setup. And you need to have a clear level where or a clear condition where if this happens, we exit the trade at a loss. If this happens, we exit the trade at a win. So me looking at the chart is only going to give you my subjective analysis. I think that it's going to be more helpful for you in the long run if we just determine what is wrong in the trading strategy or in your system that has brought you to that point. And again, it happens to everybody. This isn't a call out. Don't feel bad. But I'm just saying, as I literally say this to everybody, because I get asked the question a lot. Hey, man, what do you think about this trade? If you're asking me that question, that means you should probably not be in that trade anymore. And the toll on your anxiety, the toll on your mental well-being is too much. The capital loss is worth it to be out of that anxiety. Doesn't matter if price pulls down or price doesn't. Mal, what's going on, man? Nothing better than memories of an old chair. Lazy boy computer chair. Andrew says ZERP USD signaled a take profit on the short yesterday. Man, it's really hot in here again today. I'm not going to lie. It's really hot in here. Really hot. Copenhagen, thanks so much, man. Yeah, you're right, Mal. We know absolutely the price will move to the right. I feel you, man. All right, I need to go put some eye drops in. I'll be right back, guys. Hey, what's up, guys? Wrong window. There we go. And we are back. Okay. Dun, 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 dun. That's really loud. Let's turn that down a little bit. Okay. Eyes are feeling much, much better. Can I ask what you think about using the USD calculated by TradingView pairs, whether they're good or bad in relation to a market breadth aspect? As in, do you think those pairs would be good paired with other large cap USDT pairs or what? You know, I think that the USD pairs as calculated by TradingView are pretty good for closing price. They are, you know, they're pretty whack-a-noodle, obviously, for their high-low ranges. So they're not the best to trade off of. Again, most indicators are going to be based off closing price, so they actually work pretty good. And that is a good representation of, you know, filtering your altcoin trade and taking out having to do the calculation of what is the value of Bitcoin as well, because we have to remember that the underlying value of the alt to Bitcoin is going to be ultimately correlated to Bitcoin to USD. And this is why the altcoin to Bitcoin movements are so heavily correlated. So if an altcoin is outperforming Bitcoin, then its alt to BTC rate is going to rise. But we also have to take into account the BTC to USD ratio. one concept that I've had is to take a, like a security function, because the way that I lump coins, for example, is low sat, mid sat, and large sat, right? Not by market cap necessarily, because I tend to find that for whatever reason, and I think honestly it's just as simple as traders on Binance or algos, they're going through the ticker symbols in the order that they're in. And so coins on Binance or our spot exchange are going to be clumped by sats, especially on things like Binance, Wabi, Bittrex, for example, when we're talking about altcoin pairs. So for that reason, and for the reason that I see correlation between these three subdivisions of coins, more so than I see correlation between market cap, is I think that an indicator that looks, for example, at let's go over to let's go to something like my low sat list, right? So you can see my low sat list over here. Let's expand that out a little bit. So something that was like NPXS, BTC plus DENT, BTC plus BTT, BTC plus HOT, BTC. So just summing all these up, right? As you can do just with parentheses in the trading view symbol right there. You can just do it right here. I think that that's going to be an interesting indicator. I'm not exactly sure what I'm going to do with it yet, but just sharing my thoughts and ideas and concepts. Dance is reluctantly. Good to see you. Do I think 24-hour volume correlates with price increase and decrease? It depends on, well, yeah. It depends on, volume plays a huge part when we're looking for trend initiation, because you need volume to initiate a trend with legs. If there's not volume at the beginning of a trend, then often it's probably not going to, not always, but often, geez, man, the back of my neck is scratchy. Often it's not going to have a lot of legs. It's just not going to have a lot of staying power, because you need volume to initiate a trend, because volume is a signal that large positions in the market are taking the market one way. And you typically want to follow where the larger traders are moving, because they are generally going to be more aware of market conditions than you are. They're generally going to make the better decision. I've talked about weekend volatility. There's less volume on the weekends, i.e. price movements are higher. So the less volume there is, there's more volatility. The more volume there is, there's typically less volatility. So if there's a lot of volume and a lot of volatility, that means something. That means that there is quite a lot of buying and selling going on, but we are still having good volatility to the upside. This is why when you get good momentum, i.e. volatility, when you get good momentum with volume, that often is a very powerful signal. When you get momentum without volume, it doesn't really mean anything. It has no staying power generally. So you want to see volume and momentum to initiate a trend. Do I think 24-hour volume correlates to direct coin movements? No, not alone. You need to put that information in the context of of directional bias, like April 1st. Where do I think would be a reasonable price for VET for the next few years? Is it currently undervalued? So no, I don't think that it's undervalued. I think that it is valued at exactly the worth that it pertains to the market right now. Now, if you, I don't have any speculative interest in VeChain. I have very little investment interest in most altcoins. There are some great projects that I think are really, really interesting, like security tokens. I think are good investments. I think that new projects that are coming out, or if existing projects can make bridges and barriers, I think that they're pretty neat. There are currently existing cryptocurrency projects besides Bitcoin and besides some of the majors that I do think represent good investment opportunities, that I do think, in my opinion, that I'm invested in. But whether something is undervalued or not, I don't think that VeChain is undervalued. I don't. I think that VeChain is neat, but I don't see, and again, I don't want to get into a massive argument, because then it comes into like my altcoin is better than yours. But my point is, like, there's no track record for altcoins, and so far as their value to an investor, there's no track record. They don't pay. So the problem, this is why I think that for somebody looking for a passive income stream, understand this: when you're investing in cryptocurrency, you are a growth investor. Your only interest is the value of your asset appreciating, right? And your interest is not in your asset depreciating. So that is one investment or trading strategy. That's the only trading strategy is growth appreciation. That's a growth investment mindset. There are other investment mindsets. So personally, with my mindset, I'm looking for passive income. So things like dividends interest me. things like investing in staking, things like investing in deposit, things like investing in mining. Those things interest me because those things generate consistent returns that I can realize in the now. A lot of these altcoins, if they paid dividends or if by simply holding them, I received a reward, that's why staking coins are actually pretty neat, because you do receive a form of passive income for your investment, right? And if you reinvest that back into the altcoin, then if you pair that with growth investment, then over the long term, that is a very profitable strategy, assuming that your directional bias and your investment strategy was correct. Your investment thesis about whatever you invested in was correct. So the idea that any individual altcoin may or may not be undervalued is highly speculative, and I don't think so, because we have very little incentive for investors. And so something can only be undervalued if it represents a higher value to investors. These altcoins haven't proven that they have a very high value to investors yet. They're still in the realm of complete speculation. So once these, I would say that once after, like 10, 15, 20 years, then we can start to talk about, then we're going to have enough of a track record on whether these coins are valued or not. But something like VeChain that's only seen one market cycle all the way up and all the way down, you can't say that something's undervalued, because until it does that same thing again, or 3 or 4 more times, you can't say, because we have very little track records on these. I know I'm very unpopular I'm very unpopular on Twitter for my opinion on altcoins. And it's not that I'm, a hater on altcoins. I have investments, but I think you got to be really, really careful about taking terminology and words and verbiage about investment from things that actually produce returns on their investment and have consistently for 50, 60, 100 years. And you're talking about altcoins. Now, does that mean that altcoins aren't valuable and are not good tech? No. Does it mean that Bitcoin is, again, I'm heavily invested in Bitcoin. Does it mean that these things can't do fundamentally what they claim to do and they're not valuable because of that? No, it doesn't. In fact, I think that they will and that they do. But when we're talking about investment, different mentality. PNW Flipper, probably back down to 94.95. Am I looking at staking in Hex? No, not at the moment. Do I use leverage trading? Yes. My lucky penny. Okay, so Ethereum on the daily. It's 12:47. So Ethereum on the daily, nothing to do on the daily, although again, good momentum coming in off the reversal buy. But again, as I talked about earlier with reversal trading, for a reversal trader who has a lower time horizon, this is the trade. This was the trade, and this is the moment to take profit from any objective analysis. And then you wait for consolidation, and you wait for significant volume and a movement to the upside to confirm a bullish trend, because on the daily, we are trading against the dominant trend. The dominant trend is to the downside. And again, this same price coming back into the noise line. Price of Minx crossing back into the static line. If we do close like this, this is a signal to be exiting your long. Back on the 12-hour chart, still bearish. But again, Wada Atar printing an explosion level below the baseline, Wada Atar printing a column below the explosion level, which if we close like this is an early exit signal. If you're using Wada Atar as an early exit signal. Cracking_crypto, Brandon. So Robert Douglas, so fundamental technology value. Okay, so you still have to, I don't want to disagree with you directly, because I guess we do disagree. But my point is, if you feel that VeChain's technology as a blockchain represents fundamental value to an investor, then invest in the coin. That is your investment thesis, okay? You need to explain to me, though, as somebody who has 10 years of investment experience, and again, makes my living off of trading in my investments, the difference between the monetary value to an investor of a technology being very good that does not generate revenue. So explain to me, I guess my question, and any investor's question, should be this, right? If VeChain does what it wants to do very, very well, technologically, how does that make me money as an investor? VeChain doesn't pay dividends. VeChain, doesn't have, there's very little centralized control there. There's very, fundamental management changes that can be changed if something can go wrong. And that's difficult for somebody to invest in. It's not difficult for somebody to believe in technologically, right? Technologically. But it's often difficult for somebody to invest in. But again, that is an area where you have to say to yourself, I believe that price will rise, and this represents attractiveness to me as an investor because the technology is so good. There are things that I feel that way about. VeChain does not fall into that category, but not for lack of, there's just something about VeChain that I don't like. I just don't really see what's amazingly special about VeChain opposed to anything else. And I could be absolutely wrong about that. And because I could be absolutely wrong about that, I've staked my claim in other coins. VeChain just is not one of those. Tether exit scam soon. Hey, thank you so much, Lefty on Fire. Highly appreciate that. Libra is getting slaughtered. Yes, crypto.com for the win, man. I quite like, EOS and Cardano. Not going to lie. I think EOS has a good blockchain. I think that people can develop on it. People can make very cool projects on it. I like EOS. I can see the fundamental value in EOS. Because a lot of individuals, if EOS is widely adopted, then it offers an attractive programming platform and, a protocol to develop blockchains on. And there could be quite a lot of money in that. Especially because you can become a validator. I think that's the wrong word for EOS, but validator. And receive rewards. You can stake EOS. So and again, we're going to see a lot of, so here's kind of what I'm waiting for are derivatives, derivatives of a lot of these cryptos, right? Derivatives that provide value to an investor. So for example, let's just take a random example, right? Let's say in 5 years, we are one step closer to global adoption, right? Which I think we will be. And now all of a sudden we have EOS being widely used, Cardano being widely used, Ethereum 2.0 is actually up and running. Bitcoin is full Lightning Network and just dominating the world. You've got, countries that are caving in and accepting Bitcoin as legal tender. Libra coin has been trumped back down from where it belonged, and all these things. This is fantasy land we're living in, but let's just say that something like this happens, which I think will be, just maybe not in the next 5 years. And all of a sudden we have let's take EOS, for example. We have a ton of developers on EOS, right? So now all of a sudden, somebody creates a derivative to directly invest in EOS developers, right? And that investment is an asset that is traded, is speculative, and you buy that asset, right? And when you buy that asset, you are investing in EOS developers. And that EOS development team has to generate EOS, which is going to be converted into whatever the world reserve currency is at that point in time for selling their digital goods and services. So let's say they're developing an application game, an app-based game on the EOS blockchain or any EOS.io protocol and any other EOS.io blockchain. So these in-game purchases on this app that we are investing in is generating EOS, and we are receiving that EOS or a portion of the EOS as a return on our investment, as a dividend, so to speak, right? Not directly a dividend, but as a return on our investment, right? Now that is a good investment, right? Where there's a monetary incentive for passive income, not just growth. So for me, when I'm looking at an investment, I'm not just looking at growth, right? Sometimes I am, like when it comes to Bitcoin. But when it comes to a good investment, I want to see the monetary incentive that can be paid out to me as passive income. Because I want to hold investments for 15, 20, 30 years. And I want to know that that company can continue to generate revenue and pay me for my investment, pay me back on my investment. Is Tether safe? I mean, it's about as safe as it gets, man. I don't like Bitfinex. I don't like Tether, but honestly, as much crap as I talk, I really don't think you're going to wake up tomorrow and Tether's going to be blown out. Could be. I don't know. Would I keep more than 25% of my wealth in Tether? No. Okay. 12:55, 5 more minutes. So let's go down to the 4-hour on Ethereum. Now, Ethereum, again, in that interesting pocket, right? We talked about that pocket between the primary baseline and the tertiary baseline where price retraces to that level and rejects. Now, we can see on Ethereum has not been able to make it above the primary baseline to test that pocket in between the primary and the tertiary baseline. As we saw on Bitcoin when we were analyzing the 4-hour time frame, Bitcoin has done twice now, retraced back up into that pocket between the primary and tertiary baseline, consolidated for a little bit, and rejected again for another leg down. So there's a couple concepts here that I want us to take into account. So first off, Ethereum being weaker on the movement to the downside than Bitcoin, right? So again, there are two schools of thought on this. One is you are looking for the weaker asset to make up for it in the opposite direction. And the other, which I more lean toward, is if an asset is performing weaker, then you expect it to be weaker moving forward, right? Until proven otherwise. So Ethereum bridging that line, coming finally up into that pocket between the primary and the tertiary baseline. I mean, none of this looks really healthy to me. Now, could I be wrong and we are looking at the beginning of an uptrend? Yes, it could absolutely happen. And when I get the signal, I'll go long. Okay, I'll go long because that's just what my system tells me to do, right? I don't really see, again, am I going to be trading against the dominant trend on the daily? Yeah, most likely. Is there a good capacity here for the shorter term trade? Yes. But again, for right now, for me, eyes are looking at these levels for re-entries to shorts. Right? Maybe have a little bit more patience. Maybe don't pull the trigger just yet. Let price play out. Be patient. Let's see how the daily closes. But that's definitely where my mindset's at. And again, we got the continuation short signal over here on the 4-hour Ethereum chart and the take profit short on this candle right here. So getting you out at a good price. Had you waited another candle, you would have got out at better, but you never knew that was going to happen. And then again, that's good because I got you out of the pump. So if you would still be hedged, you'd still be short unless you were taking, a completely raw speculative support and resistance trade. And you would be out of your full risk short. Now let's go to the daily and just look, very clearly, something that just is just impossible to deny, where price is at. So let's just hide our EMS here for a second. And let's just look at this level right here. Magnet mode. Boom. Okay. This is where Ethereum touched off of. Okay. See that clearly? Support. You can see that when price broke below this level, this was obviously back in November. This is the bear market down here. This is the worst of the bear market, and this is consolidation. All right. So all we've done is we have fully retraced in a week, less than a week. We have fully retraced in less than a week. All of this is completely given back to the market, man. So what comes from here? Not an immediate resumption of the dominant trend. I mean, we just saw massive profit taking on this bullish leg up on Ethereum. And we are right back where we started. I mean, we are literally, guys, we are right back in 2018. And when did we come back to this level in 2018? September. All right. So we're a couple months early, but what did we do with this level? We consolidated from September until the middle of November. So from the beginning of September until the middle of November 2018. All right. It is the middle of July. We are a month and a half early before the beginning of September. I mean, this is not, in my estimation, this is just not the area to be putting on, long-term longs. Now, one can say that it's positive that we held this level of support, but and that the trade is going to be reversal bounce to the upside. So let's see what is, potentially what are we looking at? Potentially a 30 to 40% move to the upside. You're welcome to take your bets. Not the trade I'm going to take. I'm going to wait for the dominant trend to resume because I am an indicator-based trader, and I'm looking to catch a significant move like this and not reversal trades like this. But again, as we can see, coming back over here, Minx did signal along here and got us into a good trade on the upswing, which really was the big bulk of the trade. That was that was 10% of the movement. Right, and unless you bought at the bottom, you're not going to catch the breadth of the movement. And then it becomes, well, where do you exit? Because if you're not entering indicator-based, how are you exiting? Well, you're not exiting indicator-based. So again, the failure rate is extremely high. Wake me up when September ends. All right, guys, it is 1 o'clock, so we're going to take a quick break. Before we go to break, guys, as a trader, I'm often asked how I evaluate exchanges, what metrics I look at when I want to trade on an exchange. I say the same thing every single time: security, ease of use, and customer service. So there are only a few exchanges that I trade on cryptocurrency for that exact same reason. Exchanges have to check all of those boxes for me to feel confident depositing my funds on there. And the exchange that I've made the switch to significantly from BitMEX, because they've checked all those boxes for me, and these boxes are tough to check in cryptocurrency, is ByBit. It's been a pleasure trading over there. If you guys would like to try out ByBit for yourself, you can trade Bitcoin, Ethereum, Ripple, and EOS futures on their perpetual swap contracts for all four. They're going to be adding a coin swap very soon, so you can just switch from Bitcoin. Currently, you do have to deposit the underlying asset to trade on there, but I quite like the platform. It's very smooth, very clean, no system overload. I've never had any problems on there, and any problems that people that I know have had on there, guess what? Customer service has resolved the issue. In fact, they just gave $300 to one of our members the other day to make up for an error. So you're not going to get that on any other exchange. I have never, ever, ever, ever heard of an exchange making a mistake in cryptocurrency and giving a cash refund, a Bitcoin refund. So if you guys would like to check out ByBit for yourself, you can head over to bybit.krakencryptocurrency.com, link in the description down below. And ByBit will give you up to $60 to test their platform out for free, so you can do the Pepsi Taste Challenge and decide for yourself. That's bybit.krakencryptocurrency.com. Don't go anywhere. When we come back, we're going to go over the news. We're going to talk about Libra being grilled by the House of Representatives today, and of course, Maxine Waters. And we're going to take your user-submitted chart requests, and we're going to look at Forex too. We're going to look at my Forex trades, do some live trading. Don't go anywhere. We'll be right back. All right, guys, what's going on? Good to be back. And my water's all the way over there. Okay. Hopefully you guys are doing good. All right, so what do we want to go over now in the second hour of the show? We've talked about Ethereum, we've talked about Bitcoin, we've talked about reversals, we've talked about longs, we've talked about shorts, we've talked about Bitcoin dominance dropping and the investment quality of most altcoins. So let's go over and talk about the Forex markets. How about that? All right. Forex markets right now. Let's bring back CC-EMA. Okay. Let's see here. Aussie yen. Still bullish. CCI above 0. Minx above the 0 line. Wadatar still printing bullish, not giving a strong exit signal as of yet. And we are setting up right here. We did set up for a nice reversal baseline bounce trade. Let's see here. Aussie dollar, same thing. Would have hit take profit 1 on this movement to the upside. Pull back right back down to the daily baseline. Everything still looks quite good. Canadian Swissy has thrown up a continuation long signal today with a rising explosion level in CCI above 0. So this actually looks pretty good. Let's circle the Canadian Swissy for a potential entry tonight. Actually, just in a couple hours. The Canadian yen. Very similar in price structure, but not the exact same thing. Or that was the CAD yen, excuse me. The Swissy yen is throwing up a short signal with no confirmation, looking for this consolidation to break, but we just need more volume, more momentum. Euro Aussie still riding a continuation short signal. Haven't gotten an opportunity to exit it yet, or a reason to exit it yet. The Euro CAD. The Euro CAD was that continuation short signal that was signaled yesterday, and again, price moving to the downside. Let's see here. Euro Swissy ended up, this is the, took a short on this the last time, ended up taking profit on the exact same candle, letting this ride to the downside and getting a take profit signal now. Getting a take profit signal now, which is good because our entry would have been up here. And so we didn't get stopped out by our movement to the upside, but this is throwing up a take profit signal for you. The Euro Kiwi, still short on the Euro Kiwi, as you can see. No reason to exit the trade yet. Here's my average entry right here. I have my stop loss in profit. Probably about time. Let's see, how many pips am I up on this trade so far? About 231 pips. So probably time to set a trailing stop on this bad boy. I'll probably set a trailing stop on the Euro Kiwi tonight. Or excuse me, this afternoon. Euro Pound, long on the Euro Pound. I've already hit take profit 1. Stop loss a little bit above break even. No reason to exit the trade yet. Euro Yen. Let's see here. Continuation short signal here. Price moving well to the downside. Did wick up and hit my stop loss on that trade because my entry was not as optimum as it should have been due to the time that day. But again, no reason to exit the trade yet if you are still in that Euro Yen and you got a better entry than me. Euro Dollar. Continuation short signal yesterday in a little bit of drawdown on the Euro Dollar, just waiting patiently. Pound Kiwi still riding a continuation short signal from back on the 10th of July. That trade's doing very well. Let's see here. Pound CAD, we can delete this. Let's see here. Took the Pound CAD short. Short on the Pound Swissy. Entry here. I've already taken profit on this candle. My stop loss is a little bit above break even. Haven't gotten the exit signal yet on the Pound Swissy. Do I play Vid yet? Nah, man. MT Coiner, job security, man. Thelonious, what's going on, my good man? Pound yen, continuation short signal over here. Price did move pretty precipitously to the downside following that. You would not have a reason to exit the trade yet on the pound yen. Pound dollar. Generated a continuation short signal on yesterday's candle in a little bit of drawdown if you would have taken the trade, but no reason to exit yet. Kiwi dollar, we talked about this baseline crossover, or the re-entry point for the baseline crossover. The Kiwi dollar signaled a long over here. You'd be up quite a few pips. Same with the Kiwi CAD. I did take the Kiwi CAD long. Had about a day of whoa. And price moving to the upside. Well, we're coming up on that secondary baseline of resistance. If we can break through, I definitely see take profit one there in the cards. Let's see here. The Kiwi Swissy. Continuation long on this candle right here. Price moving to the upside. Kiwi Yen, continuation long right here. Price moving to the upside. Dollar CAD. I don't see anything on the dollar CAD. Pound Aussie, continuation short signal back here. Dollar Swissy, no trade. Dollar Yen, no trade. Aussie CAD. Aussie CAD pulling back down to the primary baseline. Let's see here. No reason to exit yet. In drawdown on this trade. Waiting. Aussie Swissy, no trade zone, except there is a continuation long that we would have done well on. And the dollar yuan. Still no signal yet from the dollar yuan. But again, I expect a lot of volatility when this range does break. But something very similar to this, to be quite honest with you. And that's it. That's it for Forex pairs. Overall, again, net up for the day. Today's progress wasn't too much, less than 1%, but overall doing well, man. Overall doing well. Slow and steady growth wins the race, man. Slow and steady wins the race. All right, checking out the crypto bubbles for today. We've got a green day in the market. Bitcoin dominance dropping, giving our alts a little bit of a room to breathe. So let's go look at our Bitcoin fundamentals. Total crypto market cap having a nice pop back up with Bitcoin's price as well. But again, breaking down below the secondary baseline. So just looking for opportunities to short the market still at this point in time. Looking at the altcoin market cap. Let's go ahead and get rid of these lines. Again, having a far more precipitous drop. The altcoin market cap pretty much back down here, bouncing off the support level that we formed off the secondary baseline back in May of 2019, where this level was established. Again, very similar to Ethereum in this aspect. Looking at longs, let's get rid of our CCEMA here for a second. We've got 22,690 positions long on BitFinex. I don't think this is indicative of anything. We see overall consolidation of the long positions. And shorts taking a big move to the downside. Shorts taking profit, continuing to take profit. 5,415 positions to the downside. I mean, just massive individuals taking profit off of their shorts, exiting long-term shorts. We have almost the entire BitFinex market skewed long now. Taking a look over at CME futures, not having as bullish of a day, obviously, on the CME futures as in Bitcoin spot. GBTC having a nice move into the upside as well, often far more indicative. BVOL 24 hour, let's take this back. Yeah, BVOL 24 hour, not really indicative of anything. It's when we see these extreme ebbs and these extreme highs that we can expect violent movement in the market. And Bitcoin dominance having its second day of drop off down to 68%. We did reach that 70% Bitcoin dominance level. Which again happened back in December of 2017. Bitcoin dominance reached 70% back in 2017. Big drop. And we also need to correlate Bitcoin dominance with Tether dominance. Tether dominance dropping off after let's go back and look at historical levels. So 1, 2, 3, 4, lower high on Tether dominance. Not gonna lie, this begins to fundamentally look good for altcoins. Bitcoin dominance dropping. Every time Bitcoin reaches a large peak and does a massive movement to the downside, we often see altcoins begin their rallies. In conjunction with Tether dominance dropping as well. Again, I'm going to be a trend following trader because the charts will show when a strong trend is establishing. And if we are going to see something like alt season, then we're going to have a strong indication of that. And it's well worth waiting. So interesting, very interesting. Let's see here. With Libra using a basket of foreign currencies to back their coin, the dollar, the pound, the mark, the yen, how will this affect the currency markets? As this will function as an ETF. Answer at the end. I don't think it will have any effect on. I mean, it could, but I don't see it having a direct effect on the currency markets. Essentially, the reason that Libra is using a basket of central bank backed assets is because they are considered to be one of the most stable forms of currency in the world. I mean, even though we get a lot of pip fluctuations because individuals have to use leverage to trade Forex markets, I mean, the deviations we're talking 1% to 2% on average, 3%, 5% if it's absolutely insane, right? Go back to the Swissy Euro crash, right? When they unpegged the price. That was, that was ridiculous. Yeah, I mean, yeah, literally like, what is it, 50 to 1 market long? That was a huge, huge, huge crash. That was shortly after I stopped trading Forex full time. Rest in peace of XCM. So, essentially, they're doing that to give it a stable price, right? They're doing that to give it a stable price. And the reason why they want a basket of currencies is so, if one drops, that's made up by the valuation of the other. And they're going to have some complex algo that redistributes their basket of fiat holdings, which is going to make it a little complicated when we get into things like, individuals can get Libra if they deposit fiat currency. Maybe because of their risk algo, they're only accepting, this week we're only accepting dollars, right? Because, we're low on dollars, compared to everything else. And maybe next week it's going to be, well, we're only accepting yen. I doubt it's going to work out like that. They'll probably have automatic digital conversion rates, but it's an idea. Just an idea, things that come up to me. Things that work around in my mind. John Presente says, how are you doing? What's going on with no one having any idea about Komodo P when it's one of the most active cryptos that is making money, a new DEX, a new brand, and a new way to fight 51% attacks? So what do you mean by they're making money? Mic muted. My mic is not muted. But from a fundamental perspective, I quite like Komodo. I think Komodo is pretty freaking neat. What do I think about Link's price for the rest of the year? I do not know. Link. Let's go take a look at the stinky Linky. All right. Let's bring up our EMAs. We're in that same bearish triangle that we saw just about every major alt fall into before resolving to the downside. So as long as we're in this no man's land, the direction is down. I need to see a nice clean break to the upside with volume, and I need to see Wada flip momentum. Link USDT. Same thing. We're coming right into that pocket of death. Coming right into that pocket of death. Nah, you're all good, man. If Bitcoin goes back to 10K, I would definitely look to short it at 10K. Can we take a look at the ZERP? All right, let's look at the ZERP, man. Trying to short against the army. Same thing. Moving average cross under. We were riding a continuation short from right here. Yesterday, we had a take profit short right at the bottom of the market. So our system telling us to get out of the short. And price rising up. Again, we kind of run into that same thing. The price is bearish. Where's the reentry zone? Right here, looking for a stop loss right around there. If you're not using ATR, so just based off price fundamentals. So you're looking anywhere between 34, 36. Let's go down to some mesos and look for opportunity right now. 12-hour, we're at resistance. 4-hour, we're actually getting a long signal on ZERP USD, which would give us a movement right just a little bit below our daily entry into the short. So is there an opportunity there? Potentially, yes. And you can take that opportunity over on ByBit if you want. EOS chart. EOS to the dollar. Over on Finexico. On the daily, EOS having a nice little bounce off the bottom like everything else today. 12-hour didn't quite make it up to the daily. We are a weaker performer here in EOS today, and EOS consolidating in between the primary and the tertiary. We're actually just about to give up a long signal, but I do not like the volume. But if you were looking to take the trade to the upside, here's where I'd be looking at. Maybe 462. Maybe 462 on the 4-hour chart. Going to be another 12%, and then that's where I'd look for that re-entry. Because if we go to the daily, where's that level? Just a little bit below our best entry on the daily re-entry for the short. FUSD, please. Brisk, baby. I talked about Ethereum for about 30 minutes earlier in the show, man. Kumazul, do I know how you can execute your trading strategy on BitMEX automated? I would say there's a couple ways. AutoView is one way. Write your own script in Python is one way, probably the best way. 3 commas won't do that for you. Trailing crypto won't do that for you. You can find a dev, like, I know this might sound weird, but you go to like Reddit, or you can go on Twitter, or, God forbid you go like in Discord. Go to discord.krakencryptocurrency.com. We've got devs in there. You could probably find somebody, if you don't know how to code, who can write that for you. It's not that difficult to write a code, to write a bot to trade for you on BitMEX. Gunbot does it. So shout out to Gunbot Wally. You can check out Gunbot University, and you can actually use the discount code Cracking Crypto. Is either Cracking Crypto or CC? I think it's on their website. To get a discount on Gunbot. If I write it myself, how do I connect it to BitMEX with your API key? You go in BitMEX account and security. You click on API keys. You generate a new key. You get a public and a secret, and then you plug that into your bot. I think your audio might be turned off, Samantha. Okay, let's see here. Okay, let's talk about some stuff. All right, so actually, let's switch over to the news. The news. Okay, so, Maxine Waters, opening up the Libra hearing with an indictment of Facebook's past mistakes. So, I don't know if you guys caught any of the stream from. So yesterday, the Senate Banking Committee grilled Dave Marcus, who is the head of Calibra, which is the subsidiary of Facebook to manage the wallets of the Libra coin. And yesterday, the Senate Banking Committee pretty much threw all the mud that they could at Facebook, saying, look, bro, you were responsible for Trump getting elected because you let Russian bots on Facebook. You're responsible for leaking data indiscriminately. You are responsible for this, and the third. Now, again, I try to remain very politically agnostic on this channel, but the fact of the matter is there are an overwhelming number of policy directors in Facebook who have worked for leftist-leaning campaigns, political campaigns, who come from I mean, very, very, very entrenched in the Democratic Party, for example, right? So the idea that Facebook, to me, on its face, colluded with Russia or allowed Russia to negatively influence the election against Democrats is ludicrous, in my opinion. I don't think that happened whatsoever. I mean, literally, there's been some stats on like the Russian bots. Every country, many countries attempt to meddle with other countries' elections. I don't think that's the reason why the 2016 election went the way that it did. But I digress. That's a controversial topic. You guys are free to feel any way that you feel about it, but it doesn't change reality. But they threw that at them yesterday. They said that, Facebook is just absolutely awful, this, that, and the third, which they are. And, it comes down to a very tricky fundamental question. Like, who do we want to have control over the currency? Because it's going to be one of these two options, So on one hand, you have
the United States government,
right? And on the other hand, you have
Facebook.
So it comes down to it comes down to, who do you want in control of the currency, right? Do you want a corporation that literally has to hire a mercenary force that does not have a mobilized army that is loyal to it for patriotic or nationalistic reasons that you could probably more easily deconstruct, but who, as many believe, corporations are really the threat, or that a corporate coin is really the threat because of the fact that they're not answerable to anybody? Or do you want a government in control that has a democratic system, if we're talking about America, where you can vote out the policymakers that you disagree with and attempt to instill your own? But then we run into the problem there of, many people think the system is rigged. Many people don't think that what they do really matters, even though it is my earnest opinion that if people actually got mobilized and understood politics, they could change the system. Most people feel very comfortable sitting back doing absolutely nothing and complaining about how the system is broken, which is completely anti-ethical to my entire mindset. You have the power. The power is in your hands. There's that. Libra mutes microphones unilaterally without oversight. But then again, you also run into the thing where the United States has a mobilized military and they're far more entrenched. They're far more entrenched than something like Facebook or any massive corporation. So, who do you want in control of the currency? Ideally, neither of them. But I do think that, unfortunately, for the foreseeable future, this is going to be the reality. We're going to see corporate coins. They're not going away. We're going to see Amazon coin. And I think that something like Libra coin, whether it's Facebook's Libra coin or not, I think that we're going to see a corporate style of a blockchain, of a cryptocurrency that is going to be more publicly and globally adopted in the interim before we see Bitcoin receive global adoption. I think that is inevitable. Andreas Antonopoulos even agrees with me. They're here. You can't put the genie back in the box. And I think that it is going to take seeing how both, as the European Central Bank has already talked about, they've already talked about how they are helping nations develop their own digital assets, right? We're going to see two things in the next 10 years. We're going to see corporate coins and we're going to see central bank coins. We're going to see both. And we're going to see both develop more dominance over decentralized cryptocurrencies. Okay. And I think it's going to take having that sour, bitter taste in our mouths to allow Bitcoin to do its next leg. So I've talked about this a lot. This is my personal feeling on the future of cryptocurrency. So let's just step outside of the gate. You know what I mean? And put our tinfoil hat on for a moment, okay? So this is now tinfoil hat session. Okay, so we're gonna see both of these things happen. It's absolutely inevitable, okay? Now, do I think that Bitcoin's gonna change the world? Yes. Do I have faith in Bitcoin? Yes. Am I invested in the long term for Bitcoin? Yes. Will I do everything in my power to help spread the growth of Bitcoin adoption? Yes. I think that it is the answer. I think that it is a necessary component of freedom. I think that you need a decentralized global reserve currency that is not monitored or controlled by any centralized authority. I think that you absolutely need that for human beings to take the next step in social evolution. I think human beings need monetary freedom, need sovereignty over their own money. It's absolutely essential. It's going to happen eventually. It's going to happen. It has to happen, right? Or else we're going to go the way of the dinosaur. And I don't think that we're going to go the way of the dinosaur because I am bullish on humanity. But again, I've got a limit order in. I'm not market buying into just yet. So be that as it is, being as that we can't put the genie back in the box, and we're going to see central bank coins, and we're going to see corporate coins. Those things are going to receive more widespread adoption in the interim because they are going to be promoted by nation states that have more reach than most of our social pundits do who are promoting the message of Bitcoin. Now, whether that's fortunate or unfortunate, of course it's unfortunate, but it is what it is. Now, the reason why I'm bullish on Bitcoin, the reason why I believe that Bitcoin as it is, so not some different iteration of Bitcoin, not some other cryptocurrency, not blockchain 3.0, not none of that. Bitcoin, the way that it is right now, the blockchain that exists right now. The reason why I think that it will succeed in its mission of replacing fiat currency as the global reserve currency is because not only because for all the reasons that I've previously stated, because it is the better technology, because it works, it's decentralized, blah, 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 all that. Yes, of course. But Bitcoin is the most secure network. And the reason why it is the most secure network is because it was allowed to grow in a decentralized fashion because the governments largely ignored it. Okay. Now, here's what the governments are going to do now. Instead of taking direct shots at Bitcoin, which is what they should do, and I talked about this fundamental reason being good for Bitcoin the other day when Mnuchin came out and gave his statements on cryptocurrency. They could have came hard out of the paint and said, we're banning Bitcoin, right? And that would have been in their best interest. I've heard the arguments, both sides, up, down, left, right, both ways of the aisle, that they're smart. They're not going to ban Bitcoin because they know that that would just cause riots in the streets and would actually push people towards Bitcoin. Nonsense. If the government banned Bitcoin today and made it a punishable crime to transact in Bitcoin, you would shut down Bitcoin adoption in the United States, probably as it is right now. Okay? Do I think that would happen worldwide? No. But I think that you would significantly negatively impact the influence of Bitcoin. And again, Bitcoin's success is not guaranteed, right? It's a fight. It is a war. We might lose. Okay. And that would be a very sad thing because Bitcoin is better for the future of humanity. But they're not going to do that. They're not smart. They are stupid. They think that they're going to create a competitor and they're going to outcompete Bitcoin. Well, they can't outcompete Bitcoin in the long run because they're just replacing what is already crappy about fiat with a digital version of fiat. That's all they're going to do. And it's not going to take humanity very long to realize the difference. The fundamental issue still exists, right? Sovereignty over one's own money, the ability to not have a central issuer of currency, the ability to not have a central issuer of currency that has artificial control of the monetary supply. None of that is going to go away with either a corporate coin or a central bank coin. Although I would argue that the corporate coin is probably going to do a better job than the central bank coin. These governments will not relinquish control willingly, but they're not smart insofar as this. They think that they're going to outcompete Bitcoin, and they will in the short term, but not in the long run. And while they're doing this, Bitcoin is going to get kicked back a little bit and continue to grow stronger and stronger and stronger and stronger and stronger, because instead of trying to swipe it down with a strong axe that the government has right now, they're going to actually give it another decade to grow like a weed, stronger and stronger into the hearts and minds of human beings who want sovereignty over their currency, who want control of their own currency, and who want free of the thumb of government. So basically, unless something drastically changes with the government around the world's response to Bitcoin and their actions toward cryptocurrency, I think we've pretty much won. Okay? That's my take on it. Justin, turn on the echo and say, Ricky Thompson says, I watched for 1 hour this morning. Congress needs education about crypto before they question. A majority of them were not intelligent. Yeah. I mean, they have no clue what they're talking about. And they did not, they didn't do the hearing was not to ask questions. Okay. The hearing was to make people afraid of Libra coin. That's all it was. Okay, Scott, who let him loose with the mixer? Kendi says, my biggest deal against corporate coins is that the average person has enough to worry about without keeping track of this currency for this currency for that jazz. I agree with you. I don't think that it's going to look like that in reality. The reason why I think the corporate coins are going to be popular is because they're going to be convenient. So, for example, things like Acorns, Stash, Robinhood, mobile apps on your phone, all of this stuff, right? All of those things make life more convenient. I think that Facebook's iteration of Libra coin is going to do the same thing. I think it's going to be easy to use. I think it's going to be convenient. I think it's going to be fast. I think it's going to be cheap. And that's the interim danger, but not the long-term danger for the reasons I just went over. Uh, 1301205 says, I've been investing in Bitcoin for a while, but I wanted to get into trading possibly, or at least get familiar. I've been reading forums and communities, but what would I recommend as a start to get more familiar with the trading topic? Mainly crypto, but interested in stocks too. Doing all the research and due diligence that you possibly can online is a good thing to do. I mean, the internet, Google, Reddit, Twitter, they are your friend. You just have to understand, you have to be very well aware of, human beings often want to think that it's very easy to get somewhere. We teach traders. If that's something you're interested in, you can check out the link in the description down below, or you can just join our Discord. We've got great traders in our Discord, man. It's free to join. Discord.krakencryptocurrency.com. Just get with people who have experience, who know what they're talking about, and can justify and explain to you the reason why they do things. If you can just find one person who's willing to take the time to work with you personally or befriend you, that's invaluable. But do your due diligence. I mean, before I started trading Forex, I did a ton of research. I mean, I wrote down everything that I could. I'm a voracious note taker. I have piles of notes on my table right now. I'm taking notes every single day because I'm thirsty to learn every single day. Let's see here. So on top of that, I don't know if you guys have seen the Keep Big Tech Out of Finance draft that apparently the House of Representatives is looking at passing. So this is a drafted bill. This has surfaced online. This is supposedly from the Financial Services Committee, which is the exact committee that questioned Dave Marcus today. The document metadates it back to July 12th. Let's see here. The document reads, quote, a large platform. So just to put this into context, this is a drafted bill that is potentially going to get proposed in our Congress to become law. And it states in part, quote, a large platform utility may not establish, maintain, or operate a digital asset that is intended to be widely used as a medium of exchange, unit of account, store of value, or any other similar function as defined by the Board of Governors of the Federal Reserve System, i.e., if you are anybody that's not the United States government, you cannot issue your own currency. I didn't find a whole lot of other good news, guys. That's pretty much all I got. And I've looked at user submitted chart requests today. So let's take this time to go over. A couple things. So we'll talk about Quadriga ATR a little bit more. I think is a good idea. And then we'll also look at my new indicator that I just published this morning, the Kraken cryptocurrency Fisher transform. And we'll talk about strategy. So here we are, Bitcoin on the daily. Here is the Fisher transform. And as you can see, I did fix, there was just a small issue. So as you guys can see over here, let's bring the data window open a little bit. So take profit 1, take profit 2, and take profit 3 levels were actually being shown out of order. I just looked in the code. It was a typo, so I fixed that real quick. It's totally fine. Just switched a couple numbers around. So now they're displaying accurately. And of course, that's going to be whether we flip long or we flip short. Okay, so all those numbers are working properly for you guys. Make sure if you're in the group to go check that out. I did a full webinar on this the other day, but I just added the position size calculator to Quadriga ATR. You can disable the trade qualifier, which is an additional feature of PTP. You can turn off the position size calculator if you want, because this is not only going to show you your position size in USD and BTC based on the capital that you input here and your risk percentage as well. You can pull Bitcoin's price from whatever exchange you want for the purposes of converting your USD position size into BTC position size. Very helpful for entering trades on BitMEX, for example, where your order value is calculated in XBT. So all that good stuff. Now let's go look at, I don't think that it's probably been populated yet. It has. Okay, so just a note to you guys: if you guys are on TradingView, which I highly recommend as a trading software platform, your charting platform, and if you guys want to follow along and see when we publish new ideas and see when we publish indicators, you should go over to tv.crackingcryptocurrency.com and give us a follow. You guys can check out any of our public indicators. Currently, we have CC-EMA, we've got Water Explosion, and Ichimoku. So Fisher Transform is only available to subscribers right now. So here is the Fisher Transform. Oh, for some reason, I have not given myself authorization to the script. How silly is that? Let's see here. I want to do this in a different one. Oh, I'll just do it like this. This will be easy. Hold on, guys. Boom. Boom. Whoops. No. Here it is. Okay, cool. That's kind of funny. I don't know why I would not have authorization to my own script. But, hey, it's TradingView. Okay. Let me just pull up the code then. Okay, and here we are back in the live. Okay, so this is just a clean, no frills, good indicator. I'm going to go over all the features that I added to the CC Fisher Transform. Again, I got a lot of requests to just do a very clean, very simple, very good indicator that can be used both for reversals and for trending. I don't know of a better starter indicator than the Fisher Transform. So this is for guys coming into the group who are looking for a good initiator to back test. I highly recommend you guys go test this one out. So obviously we can change the Fisher length right here. That's very simple. Now we can change the Fisher source right from this drop down. So we've got HL2, we've got HLC3, we've got OHLC4. That's going to change our input data. Now the trigger length, this is something that is a little bit new. Most don't allow you to do this because most people don't understand how the trigger or the signal line in the Fisher Transform is generated. I do. I wrote it myself. Not the original, but my implementation of it. So we can adjust our trigger length right here. And something that's huge is we have the default trigger, which is going to be on all Fisher Transform versions. But now we can do an exponential moving average trigger. We can smooth it. We can do an RMA. We can do an SMA. We can do a VWMA. So this is, or excuse me, just a WMA. So this is going to influence a lot of stuff. I'm going to be adding stuff as people have suggestions. I've already gotten a lot of different, Eller's bandwidth, high pass, low pass filters that people want me to add as the smoothers as well, which I can totally do. That's bread and butter to me. But I just wanted to make a nice, cool, clean down script. As you can see, this indicator is designed to not only signal reversals. So let's look here where it told you to go short right here on this candle, told you to go short and kept you short. Kept you short throughout pretty much all of this. And then gave you the signal to go short just over here. One day a drawdown and then a very good trade to the downside. But you can use this in many, many, many different ways, right? So for example, we've got the nice thing about the Fisher Transform is that what the Fisher Transform tries to do is that it converts price into a bell curve, right? Into a normal density function, into a Gaussian probability model, so that we can actually get a good oversold, overbought level. And it tells you when something is overpriced far more accurately than any other oscillator that is going to, wildly oscillate. So we're going to have a bell curve is most of the most of these sample sizes are within, 60% of samples are going to be within one deviation of the mean, or the median, or the mean. and everything else is going to be an outlier. So we're going to have very, very few outliers, very fat tails, basically. So just on every bell curve that there is, just about everything can be converted into a bell curve. But price charts, when they're converted to oscillators, are not bell curves. So the Fisher transform does do that through its algorithm. So when we get price extremes, we know that we are most likely at a market top. And when we get extreme price lows, for example, right here, we know that we are close to a market bottom. As we can see, here was a bottom, here was a bottom. And these don't happen very often with wider than 2 standard deviations. So when we go beyond 2 standard deviations of the mean, which zero line represents the mean, that is often something that we really want to pay attention to. And I've talked about all kinds of nuances in the Fisher transform. The Fisher transform was the foundation of time transformation, which I used as an initiator, which is an indicator that people come when they get when they come in the door of the group. They also get the full training video on it as well, and all the strategies that go along with it as well. So really good. This is a really good indicator. I might make a public version soon, but I've just got so much that I'm trying to do with the guys in the group and so much that I'm trying to build on the structure that we have. And I'm looking forward to continue to grow with you guys. Did I see where they are planning to fine Facebook $1 million a day if they bring out Libra? Libra can afford it. So no more tokens at the video arcade. Thank you, Nan. Advice for the noobs on what setting to use and how to use it. It's working on my trading view, by the way. I would say the default setting is going to work pretty good on the Fisher transform. 10 is a really good length. I also really quite like 8. I like 7. Those back test really well. You're going to get more signals the more you tighten it up. I think HL2 is going to work really good. And I think an EMA with potentially a value of 3 is also going to work very well. But it's just something that you want to play with. In PTP, I walk through exactly how to back test an initiator. You can I would hope that with what I've taught as far as how to do Pine Code, that for those of you who have gone through the first 3 modules and learned the Pine Code strategy so far, that you'd be able to kind of figure out what I did here and approximate it. But again, you can also manually test it. It only takes like an hour to manually test an indicator. And I walked you guys through the procedure on how to do that. Test, man. There are, I commonly every single day get people that approach me with indicators that I've programmed. They're like, hey man, so I found a way to do this that actually works better. Blows my mind every single day. And that is what happens when you get people that are passionate about learning and growing and getting out there and testing and grinding and hustling. So with that being said, guys, you know what? It's 1:48. Let's wrap it up. I got stuff to do today. I've got a lot of, I actually got a lot of more, I got some more coding I want to do. I've got some projects to knock off my board, and I need to update the Premium Plus folder. So we're going to do that. We went over Forex. We went over all this stuff today. Before we end the show, just want to say, guys, I really appreciate the support. You guys are awesome. So thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I hope you guys have a fantastic day, again, wherever you happen to be tuning in from. If you guys would like to join us in the group and learn exactly how we do things, you can check out the link in the description down below or visit premium.krakencryptocurrency.com. And I highly recommend you go put our podcast on your podcast catcher of choice. We are on Google Play Music, Google Podcasts, Spotify, Podbean, Stitcher, and iTunes. In fact, be awesome. Go over to iTunes, give us a 5-star review. It really does help boost us up in the ratings. It might not mean anything to you, but it really does actually help us out quite a bit. You can find all the information as well as current and past show notes that go over everything we talk about every episode at breakingbitcoin.money. That's breakingbitcoin.money. I hope you guys have a fantastic day. Trade safely. If you have any questions, comments, concerns, sarcastic remarks, and or death threats, leave them in the comment section down below. And I will see you guys tomorrow.